Hey, Ben at MortgageVines.com, and the second question you need to ask your lender before you work with them to make sure they understand the market is, what is coming up in the economic calendar that may affect interest rates and their movement? The economic calendar are things like the jobs report, the homes report, news about the stock market. They need to be watching the stock market because that does affect the bond market. But they need to have an economic calendar and understand how this translates to either lower interest rates for mortgages or higher interest rates. To give you an example, rates, I've seen rates that have moved all the way down 3/4 of a point in one day. But by the time people reacted and got onto the bandwagon of where rates were, they moved back up, a whole nother half a point. So they're very dynamic. They can move a lot in one day. Typically, they don't move that much. But just think if you had locked in at the bottom and saved a whole 3/4 of a point on your interest rate, how happy you'd be and how much money you'd be saving over the life of your 30-year loan, let's say. That could be $30,000, $40,000, $50,000 right there. So it's very important that they understand the economic calendar and they have access to it and really can track how this affects the mortgage interest rates.